All right, welcome back to the Value Add Show. Today we have Christian Osgood out of Seattle, Washington on the show. Christian, how's it going?
Going well. It's going well. Thanks for having me on.
Yeah, for sure. So Christian, I have a little rundown on you here. It sounds like you own 73 units, plus have a property management company and also a consulting company. I guess, can you kind of get started back from that first deal that you purchased?
Yeah, first deal I ever purchased was December of 2020, so about a year and a half ago. Picked up a little duplex about an hour south of Seattle in a place called Bremerton. 30-minute ferry ride, but hour drive from Seattle. Little duplex out there, purchased conventionally, and that's how I got started.
So did you buy?
Where are you at?
Go ahead.
Yeah, I was going to say, where are you at currently? As far as, you said 73 units. I'd love to touch base on like the property management company itself and the consulting company. I guess, how are you managing 73 units? Are you guys self-managing, and then do you guys have maintenance guys? Are you guys doing your own maintenance? If you could touch on that.
Yeah, well, it is a lot of figuring out. Started a property management company. Most of our units are in Central Washington. I'm partnered with Cody Davis on a majority of the units out there. And we had enough unit count where it made sense to bring on a full-time employee. So we figured, let's just start our own property management company. I have one full-time property manager. Her name's Hannah, and she is phenomenal. She runs all the back end, all the tenants report to her. She keeps track of everything for us. As far as boots on the ground, mostly contractors. I have a few tenants that have been long-time relationships for Cody and I that we really, really like out there, who run a lot of our day-to-day maintenance and like unit showings. And then I use a group called Beery Construction for most of our rehab work. So a lot of contracting out, but it is not completely passive. Cody and I run a lot of the day-to-day as well. So we're bringing on employees, but we're still figuring out some of our systems.
So how many units do you guys have together, I guess, that manager manages on a day-to-day basis?
Let's see. Cody and I co-own, I have 4 units myself. So we have 69 units owned together. Most of those are in Central Washington. I have a little 7-plex in Seattle, but outside of that, that I also own with Cody. So 62 units in Central Washington and 7 over here in Seattle.
What's the prices like out in that market? I know I'm not too familiar, but I know housing is like ridiculous out there. What's like the multifamily prices, and how are you guys navigating that? Obviously with creative financing. Yeah,
it varies quite a bit from where you're at in the state. And unit class. I mean, you can see stuff from Seattle area. You can see stuff going from $350 a unit to Central Washington, where you're going to be a lot closer to $100,000 a unit, depending on the size of the building. It varies quite a bit though between. Like we have some duplexes and I have a 38-plex. So Central Washington's a lot less expensive than Seattle. Seattle is going to be one of the more expensive markets in the U.S. right now.
Yeah, has that made it tough for you,
sense.
I guess, finding new deals?
Not as much. Everything that we've done is relationship based. So right now, I think the most popular trendy ways to do real estate is you have a lot of people doing wholesaling right now, and you have a lot of people doing syndication. Those seem to be your biggest, social media popular strategies. They're both extremely marketing heavy and on high volume. So if you're trying to compete in that space, this market's ridiculous. It's really, really hard because you have a lot of saturation. Everything Cody and I do, I call owners and I just learn how they got to where they're at. So if I buy a duplex down the street from you and you have a 12-plex, I might call you and say, hey, I just bought a property right down the street from you. I love this neighborhood. I'm new to the area. I'm trying to figure out how to scale up. How did you get to 12 units? And I'll start a relationship that way. So when I call, I'm doing maybe 3 to 5 calls to owners a week. It's not high volume. The goal is to book a meeting. I just want to get coffee with you and learn how you did it. It's not transactional. So the way we're doing deals, we get to get really creative because we have people who trust us. I know their goals. They know my goals. And it is 100% a relationship, which you can do anywhere in any market.
That's interesting. So you're not necessarily calling owners like, "Hey, I want to buy your apartment complex." It's more of, "Hey, how did you get to where you're at? I'd love to meet up with you and build a relationship." And have you gotten multiple deals from that, just from doing that?
We have gotten almost, I would say we got all of our deals from that. There's a few that are on market, but even those were all seller financed, and we were able to put them together different than other people were because we got to figure out what does the owner actually want, what are their goals. Obviously, if you're calling on a listed property, it's going to be a little bit more transactional, but we've done almost everything we've done by not asking for the sale, which is backwards. And I've had a lot of sales training as a Cody, so I think Cardone or any of my past employers would probably slap me for saying don't ask for the sale. But that is really what we do. I just want to learn how they did it. The knowledge is worth more than the deal. But it turns out when you have a great relationship with an owner, the owners in a market know other owners. When you've just communicated what they want and succinctly communicated who you are, what your goal is, and why that's important to you, they're going to be invested in helping you succeed. And so if they're not doing a deal with you, they're going to introduce you to the next person. But as just part of a relationship, when you want to help each other, the deals just start appearing. I do very little work prospecting. I take a lot of coffee meetings. I talk to a lot of people, and we all transact as friends.
That's awesome. I think a lot of people can get a lot of value out of hearing that. I personally own 134 units myself. A lot of them have been through owner financing or getting creative financing with the owners. Mm-hmm. And one thing I think a lot of people fall into the trap of, they'll cold call an owner and get them on the phone, and that just immediately ask for the seller financing, which I'm sure you can attest to, I think is a little bit backwards. I think you want to try to build that relationship with the owner before you go in for the ask. Would you relate to that?
Absolutely. With seller financing, the owner's a partner on the deal. Like, they're staying on the deal. They're playing the bank. They like it or not, you have an ongoing relationship with them. And I've had some deals where the owners are really easy to work with. I've had deals where they're really uncomfortable and you're seller financing and you have to answer a lot of questions all the time. They want to know about the property. So you really want to set a solid relationship with someone seller financing, because they're going to be a part of your team, like it or not, until you refinance or sell that property. So the relationship.
Or go ahead.
I'm going to rephrase how I'm going to answer this question, actually. Yeah. When you're just trying to do a transaction, the whole deal is just based on, hey, we want to sell the property, and people try to sell it on, hey, you're going to get these tax benefits. You're going to get all. People generally are not going to sell or finance to you because of a financial gain to themselves. That's usually not why they're wanting to do it. They want to do it because they want to help you purchase the property and help you move forward. When you have a relationship with them, it goes beyond the money. For a lot of the people that I sell or finance with, like, we have people who own hundreds of units outright. There's nothing I can add to them monetarily, but they do know me personally, and they know my goals. They know I love teaching, and they're huge, huge on teaching themselves. As they unwind their portfolio, they want to make sure that the next generation carries on the torch from what they started in building their portfolio and teaching others how to do the same. So they're invested in helping me, which is why they want to seller finance. They're the easiest people to seller finance to or with, and they're going to help me achieve my goals while I help them achieve theirs. That's where seller financing, creative financing gets really easy, and you have a lot of success.
That's awesome. Yeah, I completely agree with that. I guess to bring value to the listeners, how would you, if you were just starting out and you didn't own any properties, I guess, how would you find that first deal in today's market?
Well, first I would identify your market. That's the first step, is just know where you want to invest. Invest somewhere where people want to live, that you want to own. If that's somewhere really close to you, awesome. If you just live in a place where you don't see a lot of upside, choose another market. But once you choose your area, all you have to do is figure out, okay, who owns here and how do I call them? I have a YouTube video that's like 5 minutes. I don't use any skip tracing or software. Google Maps has every property ever on and off market. It's all in Google Maps. Click on a roof that's multifamily, call the owner, master your story, and have a brief conversation. Hey, I'm an investor in the area. I saw you own this 12-plex down the street from me. no idea how to own something like that. Can I ask you how you got started? And they're probably going to answer with, well, I'm not selling. Like, awesome. I don't even know how I'd buy it. And your conversation will develop from there. But it's all about learning. The knowledge you'll gain from that, if you're a new investor, is more valuable than just buying a deal. Everyone gets stuck on, how do I find my first deal? Don't worry about it. Learn how other people in your space bought their deals, and they will teach you how to buy from them.
That's awesome. I love it.
How are you structuring these deals? So obviously, you build a relationship with the owner, you get coffee with them, and then maybe, hey, they've got this, 38 unit for an example that they want to sell.
Yeah.
When you're at the table, I guess, what terms are you looking for? How do you make it work? I know you asked yourself a couple questions. I don't know if you want to touch on that. I think it's, how do I own it? How do I keep it? I'd love for you to expand on that.
Absolutely. So yeah, there are two things. So first, choose your market. Like I mentioned, you want somewhere where I expect appreciation. I'm not going to do my math on, hey, it works if it appreciates, right? So I'm going to be buying on cash flow. So once we choose our market, and it's an area I think is going to be going up and up and up, two questions are, how do I own it and how do I keep it? How do I own it? Just means I need to structure the debt and equity to figure out, how are we going to close on this property? How are we going to make it make sense? Where's the money coming from? How do we keep it is answered by cash flow, which is the most critical piece. I need to know that I can hold this property forever. If I never lose that property and I figure out how to acquire it, no matter what creativity I use on the front end, if both questions are answered, I'm going to build wealth in real estate. It's going to go up in value over time, and I'm going to get paid to wait. So in a down market, right now we can afford to drop rent about 40% and still cover all of our expenses. The largest drop we've ever seen in rents across the US was in 1920. It was 18.4 something percent drops. So unless we're twice as bad as the Great Depression, I can hold all my properties forever. In a down market, I'm just going to get paid to wait for it to go back up. If we can answer those questions, that's it. As far as how we're structuring them, every single deal is unique. I've done a different structure and a different partnership for everything that we've closed. We've done stuff where we get 100% of the cash flow, and there's a huge buyout 5 years from now, like a 2-to-1. We've done deals the other way where they're 100% debt. And we're paying 10% for a deal that cash flows 25%. If you have a lot of cash flow day one, you can take on more debt. If it's a little skinnier on cash flow, but there's a lot of upside on the back end, you structure so there's more equity for the other partner. That's more or less the balance that we look for in closing deals.
Yeah, that makes sense. Can you talk about, I guess, the whole process of the 38 unit? How did you call the owner? How did you acquire it? How did you structure it? And then we can talk about, the value add you're doing to that deal.
Yeah, absolutely. I love this deal. This deal is really fun. So this property was first listed 13 years ago for $2 million. And it was not worth $2 million when it was listed. The building is in bad repair. Septic tanks have issues, minor roof issues. All the water heaters are shot. And generously 3/4 of the tenants were paying. Had a lot of problems. So it's not bankable. So the only two ways it was ever going to get purchased were going to be they have to sell or finance, or they're going to have to get a cash offer. No cash offer came in 13 years. It's been on market, off market, on market. Going on for a long time. We picked up a few units in that market, Central Washington, Moses Lake. And we have a reputation for when we offer, we always close. So when we offered on this, it's gone in and out of contract so many times, they were really skeptical. They're like, are you guys going to close? Like, yes. The difference is we really got together with the owners and the owner's niece and got to know what exactly they want. What no one else has figured out is all they really wanted was a little money to walk away from it, and they wanted to be paid $10,000 a month in perpetuity. That was their whole goal. They just wanted to retire on $10K. So we structured a note with 4% interest, and the rest, it was a $2 million purchase, 15% down, seller financed. We just set the monthly payments to $10K, and it's a whole bunch of principal pay down. And it's a property where as soon as we got the tenants paying, which took a few months, it cash flows positively, it covered itself, and we get a massive amount of debt pay down while they hit exactly their goals. That's all we needed to close it. It was super simple. It was a phone call and a quick meeting of what do they really need and how do we structure it.
Yeah, that's great.
Awesome. That's how we not lose it. We started the first 6 months, we negotiated a lower pay down. We scaled our way up to that 10K. Made sure we don't at any point.
What kind of work did you have to put into that property, and how did you finance the rehab on that?
So this one I raised 100% of the down. So I purchased the building $0 out of pocket. Cody and I, our input to the building was starting renovation cost. So both of us put in $50K. That got started. Replaced all the water heaters. Added risers to the septic so we can actually pump it. Apparently the old owner used to just chuck a sump pump in there and try to pump the septic into a ditch on the side of the road, which is disgusting. So we got the immediate problems fixed. Our next step was renovating the vacant units. We're doing about $25K a door. So I mean, we're making them nice. Stone countertops, undermounted sinks, stainless steel appliances, floors, walls, everything. These units are now gorgeous. We're just now leasing them at about $950 a unit. Previously, people were paying about $400.
Wow.
So a lot of upside there. A lot of work to get it done. Another piece that we knew going into this, the city wanted to buy a little sliver of land off the front of the property for us. They're building a roundabout that goes into the city. We'll have the whole Welcome to Moses Lake sign. It's actually going to be a really pretty addition. But that also helped capitalize us. Right after close, we got like a $30,000 check, which was a free renovated unit right off the get-go. Other than that, we have the cash flowing. So as people move out, sideline the cash flow, and the rest of the tenants are paying to renovate the building.
That's awesome. So is the plan for that to refinance it after a few years, or did you structure it with these previous owners that you will be paying them off, for 10 years at $10,000 a month, and then refinance it at that time?
No, that's a great question. So the structure of the deal, $2 million purchase, 15% down, which I raised capital from 3 partners at 100 each, and it is on a 5-year note. The goal is to refinance. We bought for $2 million, fully renovated and stabilized. It's worth about $4.5 million on a 6 cap rate, which is generous for that area. Renovated, it's probably going to be valued on a 5.5, but conservatively, there's $2 to $3 million of upside. So the refi should be pretty easy. We just have a long road ahead of us. We're done with 5 units being renovated. There's 38 units. There's a lot more to do here.
Can you talk about unit number 7? Wasn't there a story with that one?
Yeah, unit number 7. Yeah, this was awesome. So the way I shared it online is probably different than I'll share it in this podcast. It was actually a total blessing that this happened. But we got a truck from unit 8 that ran through unit 7, and by ran through I mean like they went all the way into unit 7. Huge hole in the wall, took out the window. Fortunately, they had excellent insurance. And that was actually, Unit 7 was a unit where we were trying to collect. They were one of those non-pays. Turns out the actual tenants had left, and there were just squatters in there. And we had no idea. We hadn't figured that out yet. So as soon as the truck went through the wall, the squatters left. Insurance paid not only enough to fix the wall and the window, but there was a little surplus where I fixed the shower issue. So they basically paid for me to renovate that unit just a little bit, get it rentable, and we leased that 5 days after repairs for $800. So I went from no income to new window, new wall, fixed shower, and paying tenant. So that was a huge blessing. It's not always that way when someone drives a truck through your building, but that's just part of the adventure of picking up a new building. 2 days in, we had septic fail in one of the units, so we had poo coming through the shower. Like the same week we closed. So you get some chaos when you pick up a dirty building. But you know what? It all works out. You keep pushing through, and now these are all problems that have been addressed. And it's every step we get that much better when we move forward.
That's hilarious. Yeah, I think I always see people getting into the business, they'll read every single book, and they'll even take courses. They'll watch a million YouTube videos. But I always tell them, until you really get in there and buy your first deal, I mean, you can know everything, but crazy things will happen, and you just have to be ready for them and willing to accept what's going to happen, and just look at it on a long-term basis. And crazy stuff like that does happen quite a bit, unfortunately. But you just keep moving, and some things work out for the better, and some things you take a big financial hit, but you just keep moving forward.
And I think a lot of it's mindset.
People people spend a lot of time in the education. I've seen people get stuck on, I love Bigger Pockets, absolutely love them. That's how I got started. But they get stuck on Bigger Pockets. They're like, I got to learn this, then I got to get the next book, then I got to learn this, then I got to get the next book, and then I'm going to go to Grant Cardone's Growth Con, and then I'm going to get another book. Application is more important than education. You're going to learn more doing than you ever could in a book. Get a baseline of knowledge, absolutely. But at some point, the only way to become an investor is to go buy a property. It's the quickest way to do it. Is you want to invest, go invest.
And Christian, are you full-time in real estate? I know you've been doing this for a year and a half. Are you 100% full-time real estate investor?
Yep. Full-time real estate investor. I run we have Multifamily Strategy, which is our mentorship group, which I'm wearing here.
Nice.
Multifamily Strategy, I coach about 40 people, small groups, 8 to 10. We just do that nationally, internationally now. I have a few people out of Australia, which is awesome. We have our property management company, which Cody and I both run with the help of Hannah. And then everything else I do is acquiring portfolios and helping a few of our clients get into their first deal. That's more of a hobby for mine than anything else, but I love helping people get started.
How long were you with CoStar?
I was CoStar for 4 years. I started on their lambs.com team. That got acquired by CoStar 2 weeks after I joined. So I accidentally became a CoStar employee and went through the ranks of, I was a client relationship manager. So I taught people how to use the commercial real estate software and how to market on LoopNet. Graduated a sales rep. Actually did really well there for a few years. And then I classic case of I spent too long learning and not enough time investing. It took me till the pandemic hit where I was sitting at home. I was like, what the heck am I doing? I'm teaching people who own real estate how to own more real estate. Perhaps I should buy some. And shortly after my first duplex, left the rat race, and this is all I do.
That's awesome. So were you, was CoStar your introduction to real estate, or did you know you wanted to get into real estate before joining CoStar?
I was always interested in it. I mean, I had purchased a condo that I had planned to turn into my first rental. So I started on hey, I'm going to buy a single family and I'm going to scale up. I've learned that it is much more efficient if you want to own 30 units. Buying a 38 is a really efficient way to get there. I don't like adding steps, but that's something that I learned. So I was interested, and I was a super novice, but CoStar really was my entry into understanding the math and the jargon and who your players are, what role the bank can play, when you introduce property management. All those pieces started coming together in CoStar. The one thing I would share with people is I learned a lot of what I needed to learn in CoStar in my first 2 years. And I stayed another 2 years because it was really good money and it was fairly easy for me. Had I started 2 years earlier in just investing, I'd be a lot farther than I am today. So if you have a job, learn what you need to learn at your job. And as soon as you have learned the things that you need to master, don't work for money. Figure out how to apply that. You either need another job or you're ready to quit your 9 to 5. It's one of the two. But if you're not learning, time to jump.
So were you doing the consulting while you're working for CoStar, and that kind of supported your life after you left that for the short term until you started getting additional rental income?
I started the consulting company with Cody about 6 months ago. I was out of CoStar for about a year.
Okay.
I got enough rental income to cover my home mortgage and basic living expenses. I did that in 2 duplexes. You don't need to always hit home runs. You can get rich hitting doubles and singles. I just hit 2 home runs with my first 2 properties where I got excellent cash flow deals. It paid me enough where I could just cover cost of living. My wife's a teacher in Renton, so that income helped supplement. That's where I jumped off. However, there's not a lot to live on, so I had to push. That lit a fire under my butt to start buying real estate. I started buying very, very quickly after that. I scaled from 4 units to 55 units in my first 12 months of being an investor.
That's awesome. It's all through creative financing. So, I mean, when people hear that, I think you think of like, I'm going to somehow have to raise, $5 million, $6 million from investors to get to that point. And I think you're a true testament, obviously, of, you don't have to do that to find deals and to buy properties, which it can be tough. But as you said, I mean, it's all about relationships.
Yeah, it's not that difficult. And that was one of the most surprising pieces of this whole adventure for me. There's so much darn money out there. If you learn how to find a deal, the money just seems to appear. Like everyone wants to invest in real estate for the most part. I mean, there's a ton of people who have money, want to be involved in real estate, and don't know how. So if you're loud enough about what you're doing, the money just kind of takes care of itself. That's been my experience. You have to focus on the deal. And when you have a deal, people just start raising their hands. Like, how do I get in with this? How do I place capital? In seller financing, we have a lot of stuff that's 90% financed. I guess you can say that's technically raising capital, right? I mean, the seller is the capital raise, but they're a part of that deal, and they're obviously interested in offloading the property for whatever their reason is. So a lot of the money just kind of comes together in your original deal structure. Something like the 38. We asked 4 people in a 12-hour period to do our $300,000 capital raise, and 3 of 4 of them said yes. I mean, it took 4 phone calls in a couple hours. We forgot to raise the capital until we were like 2 weeks to close. We were like, yeah, we should probably fund that. And that's how we learned how to fundraise.
Are you giving equity on those? Are you giving equity on those raises, or is it some sort of like just a debt payment that you can refinance and pay them out, or are they investing in it and then getting an equity split for those investors?
Starting out, I gave equity on the 38. And that's what we had to do as a first deal. We were fairly unproven. That's what we decided we needed to show the owner. So we came in, everyone's a 20% owner. There's 5 people, 3 capital investors, Christian and Cody. We have a buyout clause for all of them. They get a 2-for-1 on their money in 5 years. And yes, that's expensive money. It's like if you're into the real estate math, it's like a 15% IRR. However, it's much more expensive not to do the deal. So we put it together that way. Right now we're negotiating early buyouts. Moving forward, debt is almost always way cheaper than giving equity. We had to do it to get started because we didn't have a track record. At this point, I prefer to write a note backed by the real estate. So if you invest, we'll take our, I bought 3 duplexes side by side as an example. They get a 2-for-1 buyout later. So it's structured kind of like equity. If we fail to pay them out, they get 100% of the property. However, we get 100% of the cash flow day one. And so whether or not they're on title or have equity, you don't always have to give them equity. You do have to back them by the real estate. And if you're bringing on partners, I don't like being partnered forever. So every partner, save Cody, has a buyout clause in the agreement. I have the right to buy you out in X time for X dollars.
I'd love to dive into the raising money portion of that. I'd assume it's, the same as like building a relationship with the seller. Mm-hmm. Are you building, is this family and friends, or are these people you build relationships with? And then, I guess touch on that if you could. Yeah.
I grew up, my dad said never use money with family. And so I've just never tried. I don't want to test it. So I've never used family or friends for money. I don't like starting there because if you like your family and friends and you involve money and it gets weird, it's awful. And there's enough money out there where it's not that hard. Because we go after relationships, I know what everyone wants and everyone knows what I want. We sit down for coffee. I've talked to, again, I make 5 calls to owners and I probably do 4 or 5 coffee meetings a week. Pretty much every lunch is spoken for. So I just sit down with people and talk about what they're trying to do. I try to follow that 80-20 rule the best I can. So unlike this podcast where you guys are letting me talk 80% of the time, I would typically be in your seat asking them questions and listening to what their strategy is, how they're trying to grow. A lot of those owner meetings, I learn how they're trying to multiply their money, what their goals are, if they're hands-on in their real estate. So when it comes time to do a deal, I have people who have property, I have people who have money, I have people who I can help reach their goals. That duplex example that I used, I needed more cash flow at that time. That was my only focus. The guy I talked to, he had just done his first flip property, and he's like, you know what? That was my first successful deal. I've done some other deals that weren't as successful. I just want to figure out how to double my money every 5 years in real estate. That's all I want to do. And so that made the pitch for me. When I had this deal and I saw a whole bunch of equity upside and a little skinny on cash flow day one, I just called him up and said, hey, I don't want to give a lot of cash flow on this. What if I just double your money in 5 years? What if I just put it in writing? I will double your money or you get all these properties, but on today's dollar 5 years in the future. Stellar deal for him. He hits exactly his goals. And it's a totally organic conversation because we weren't being transactional. We've had coffee twice and we just talked about what he wants to do. So when we see the deal, I just have to think of, wow, who benefits the most from this structure? Give him a call, and it just honestly, we almost always get a yes. Because it's not a sales pitch. It's a, hey, you pitched me an idea and you communicated you wanted to do X. I have an idea on how we can do X. It is that easy.
So are you securing that by a second mortgage on the loan, or how do you go about securing their investment on the property? Or is it through the LLC?
It does depend on a deal-by-deal basis. Most typically, I will include that in the operating agreement. If we fail to perform to whatever standard, here's the collateral. It's all spelled out on the operating agreement.
Gotcha. Okay. And when you say 2-for-1, just so everybody understands, if somebody invests $100,000 with you, 5 years down the road, you're going to give me $200,000 of gain plus my $100,000 back, correct?
Mm-hmm.
Or is it a total of $2,000?
Or I'll double your money. So you put in $100, I'll be paying you $200. So your principal
Gotcha. Double
plus a duplicate of your principal. Sorry, I
gotcha.
I
Just wanted to make sure. Yep.
Yeah.
Christian, could you touch on social media? I know you've been starting to be, pretty active on that. You and Cody have a YouTube page. Have you gotten a lot of outreach from that? And I guess what's your guys' goal? You just want to help people? Could you expand on that a little bit?
Yeah. You nailed it. The reason we're doing this is I really want to help people get started. I have found there's a lot of ways to make money. Not everything makes sense to me. If you're talking like crypto and NFTs, I'm like, I see people making money, and I don't understand how a digital salmon sells for $2 million. It doesn't make sense. So for me, I have found a way to break out of the rat race that works, and it's relationship based. And I'm really proud of what we've accomplished. Cody's 22 now. He has 87 units. I just turned 30, but I've been in the game for a year and a half, and I have 73 units. So we figured out how to acquire these, and we figured out how to do it on cash flow. So I love the principles of what we're doing. I'm really proud of what we've done. There's a point where you can just buy every deal, or you can help people. And we've reached a point where I really want to help other people do that. And so that's the whole point of social media. I'm not someone who loves Instagram and TikTok. That being said, it drives a lot of people to our YouTube channels. If anyone watches me post anything stupid for 15 seconds on TikTok, the goal is that you'll watch something of value on my YouTube channel. And that's what we're trying to accomplish with that. A lot of our outreach for our mentorship program flows directly from YouTube. I get a lot of the questions of how do I learn how to do this? And I just have people reach out. What Cody and I are working on now, and I haven't really announced this yet, so hopefully Cody's okay with this, but we're working on pre-recording the mentorship and releasing it on an online platform, so anyone can do it on their own time. One of the biggest issues we found is some people are like, well, I'm just not available during the times that we're doing the group mentorship. So in order to reach more people, I'm having a pre-recorded version where you can go through modules and ask questions in the app. We'll answer with a video Q&A, but that's what we're developing right now. And the goal is to help people jump out of the 9 to 5 at a super affordable education price.
That's awesome. I love it.
Yeah, I do too.
Yeah, and that, and that, I mean, I think that's just, it's like a full circle almost, because you started with maybe a duplex or so, and then you build a relationship with owners, and they helped you along the way doing these creative finance deals, helping you out. Now you're returning the favor and helping other people out to get out of the rat race. I think that's awesome. I think that's why me and Drew have started the podcast. We just want to learn as much as we can and help other people, and I just think it's a win-win all around.
I love that. Absolutely love that.
So, Drew, you got any other questions?
Yeah, I'm just curious. For your property management company, what kind of software do you guys use?
I use AppFolio.
Okay. Yep. We use that as well.
Really, really like that software. Cody and I have used that previously. I'm really comfortable with it. What the only hiccup I've ever found with it is it takes a little while to get support on it. So if you need support, recommendation is just find a third party company because it's worth paying a little extra. But the software is just phenomenal. It's easy to use, it's user friendly, and it honestly doesn't let you make mistakes, which is nice. Like if you get stuck, you're like, well, I messed something up, and you don't want to mess up your money. As soon as you if you're doing property management, you need excellent property management software to keep yourself from making any mistakes. An AppFolio, I think there's a company called Buildium that people really like.
Yeah, Buildium's another big one, and then there's a few smaller ones for like just owner operators as well that I've seen out in the market that I think are actually pretty well put together. So there's definitely options for especially new people starting out, and then AppFolio I'd say is probably for somebody with at least 50 units that they owned and operated.
Just because that's actually a requirement. They won't give you an account without 50 units. That's their bare minimum.
So looking into the future, I guess, you kind of spoke on the coaching and things like that. As far as real estate investing, are you trying to, build this up to 500 units, 1,000 units? I guess what are you and Cody looking to do?
Well, with the creative financing, we've used a lot of leverage. And while we've done a lot of deals under market value, so we have more equity than the amount of down payment we have. A deal that's 90% seller finance doesn't mean we're actually 90% leveraged on the value of the deal. That being said, we have a significant amount of leverage to pick up that much real estate that fast, not using a lot of our own money. First goal is we want to get to 100 units, which we're almost there. But we're going to get to 100 units, and we want to pay that debt way down. So I'll probably acquire a little over 100. I'll sell off a little bit to kill some debt. And then we're just going to use that cash flow to hammer that so that I'm operating out of a base. I would like to see my actual loan to value ratios. I want to be about 60% leveraged. Right now I'm closer to 85. So I want to pay off a few properties all the way, and then we will do another push to the next 1,000 units from a heavy cash flow base with less debt.
Got it. That's awesome. Yeah. Oh, that's great. Jacob, do you have anything else here to finish off?
They're a little burned
out.
Yeah. That again?
No, I was saying,
Go ahead, Christian. No, I think, this has been great. This is very helpful to me, especially with the whole relationship part. I remember I just called a storage owner here in my local town. I was like, hey, you looking to sell? And I think that's something I can do right away. Tomorrow is, start getting coffee with people, just really learning instead of being transactional. So, I mean, I've gotten so much value already just from this podcast that I can add tomorrow. So I'm just trying to get started and try to get in your position one day. So I appreciate you coming on. Drew, you want to wrap it up?
Yeah, Christian, I guess where can people get a hold of you and learn more about what you're doing?
I try to keep all the messaging going through one app. I've just landed on Instagram. I don't know why. This IG is the easiest way to reach me. So if anyone has any questions or wants to connect, just ask Christian Osgood. If you want to learn how Cody and I do what we do and don't want to pay for it, we have a lot of information on YouTube, and I am posting 3 times a week. So, I mean, we're putting out a ton of information on there. That's Cody and Christian Multifamily Strategy. Follow us there on YouTube to see what we're about, how to build relationships, how to do the math. I mean, we really share everything that we do in 8-minute clips on YouTube.
Awesome. I like it. Thanks for coming on. It was great.
Absolutely.
Thank you.
I appreciate you guys having me. This was fun.